Tesla. Beautiful chart, beautiful trade, beautiful opportunity. Beautiful. Fucking beautiful. Alrighty, let's go talk about Tesla. Because this thing is just, man. Alrighty, so we're going to do a quick little structure breakdown, and then we're going to go into what the narrative was kind of like and what the sentiment was like over here in Q3, Q4. Actually, this was not Q3, Q4. Q3, Q4 was all the way up here. So this was the end of 2023, and what was happening over here was we were trying to get some sort of higher low in the weekly time frame, and we gap down on earnings. We closed this little bear gap right over here, and then we started to mark our way down again, and this is an imbalanced candle, and then we put ourselves in some sort of like little bear gap over here, and then we put a flat top resistance off of that. So take lower high, lower high, and what are we getting over here, guys? A potential shift in structure. So lower high, lower high, lower high, higher low from the previous lower high attempt, because it broke through. It took out all of these lower highs, lower high, right? And then from there, once it takes out all those lower highs, what we're looking for is a pullback into where the heavier buyer was previously at. Where is the heavier buyer previously at? Where is the spot that makes total sense? Well, here's your earnings candle high along with like the bear gap close. So what I'm looking for, if the auction isn't necessarily that strong enough within the ranges of over here, and we start putting in a lower high from the news candle, the gap up day, considering the fact that we are pushing higher, really heavy volume, the heaviest volume candle ever since this day all the way over here in January 2023. And that is an earnings candle. So aside from earnings, this is probably the heaviest volume candle I've ever seen. Maybe except for December of 2020. Okay, that was a 660, geez, Tesla and these weird numbers. 666 mil. This was 100, well, that's still a lot of, or what am I saying, bro? 243 mil. So this was a really, really, really heavy volume candle, given the fact that we had a lot of bearish sentiment over here where everybody wanted to short the whole on Tesla. There's going to be a lot of over leveraging kind of happening within Tesla shorts, built up over time and over time and over time. And then obviously that's going to result in major deleveraging, where you get the one side that has been very common within the name to start obviously mitigating their way back down into here where they previously were probably shorting at, given the fact that this was such a crazy expansion. And what we're looking for now that we go into how the daily chart looks is we're going to be looking for, okay, we gapped up into this candle over here, and then we obviously got a wick off that top. We gapped down the following day. We were down 5.5% on Tesla for the day, and then obviously we tried a higher low, really low volume over here, and we're kind of closing red, but we're trying a higher low as it seems, and then we got a lower high coming in off this bear gap, right? As well as actually the opening print of this day, right? So whenever you're looking at this and then you're seeing how, okay, we put in a major expansion candle with a lot of volume, and the main thing I want you guys to pay attention to is the volume patterns here. Major expansion, really, really heavy intention shown through the volume, through how we exploded plus 15% on the day for Tesla. And then you're getting, obviously, your sell-off afterwards, profit takers, maybe testing this resistance, potentially support, closed at lows. This candle closed at lows. And then you get, following next day, you push even lower, and then you start finding yourself a little red hammer candle, really dry volume, followed by an inside bar, right? And then you push higher, and then there's a sell wick up there, and then you close back towards the lows of this support over here, right? So whenever you see a valid hammer candle, guys, and you see a support trying to be established for how many days on end over here, but it just won't really follow through with anything that looks like, okay, looking like, okay, potential lower high, but we never got a buy wick there where it just continued its way higher aggressively. And given the fact that this closed beneath all of these previous candle closures, just signifies how we're closing near lows, that this thing is not ready yet. And now I'm looking at a new draw beneath this low, right? And as we get beneath this low, where's this essentially leading us into? Well, we have 176 beneath 176. What do we have? Well, we have the fill of this gap, or the top of it, and then beneath this, right? And that wick doesn't really play any significance. What I more and less like to look for is gaps closing, earnings candle highs, high volume drawing liquidity to a particular spot that makes, typically price will gravitate towards a high volume territory. This being like this candle. This is technically like the orb high off of the earnings candle. That's the orb, but this is like 30-minute orb, I guess. So whenever you're going back and you're looking at this and you're saying, oh my gosh, we have a really, really, really heavy volume gap up. Well, decently heavy volume gap up. It reclaims support. It bounces. And then the following day we get news. Or 2 days later we get news. And that news is super heavy volume. The fact that this is the sell side now. Sell side is pushing its way lower. This candle spread is favoring the fact that it's going to give up this hammer candle higher low attempt. And it's going to dig further into this newly established bull gap. The newly established bull gap, guys, is technically from here to like here. So it's like a 10% bull gap that we need to cover, and there needs to be a collection of demand within this bull gap for us to then continue our way higher, given the fact that we got our first attempt right above the gap fill closure, and then we put in another low, and then that low follows by a gap up, and then the expansion even higher. That expansion higher being decently increased volume. It's also above like a 4-day external. So what I mean by that is we have this new established gap. If we go into the 15, you'll be able to see this. There's your new established gap. But what are we doing over here is we are, if you go to the daily, we're getting right above this 4-day external high, right? So it's actually into this bear gap now. So that's what they're fighting for now. So whenever you go in and you see, oh my gosh, okay, well, they're filling the bear gap, but then they kind of took a chance at basing it above and breaking it out. Well, this was a failure. It pushed into here, and then it kind of pushed into like the previous support that was trying to be established, and it failed. And it failed for how many days on end over here? Right? But what am I looking at? I'm looking at bull gap fill, followed by a red to green move into consolidation into the close. And then afterwards, what do we get? You could take your swing low, swing high. We get a gap down right into the 618 of where the pivot makes total sense. So whenever you guys are grabbing fibs, I'm going to take it from the swing low to the swing high on a pivot that makes a lot of sense, where you can start looking for the higher low, and then the higher low should be off like the discounted range. So 173.60 down in the 173.10. And then what do we get right after that, guys? We get really nice move higher. And this is where I actually caught this on bi-weeklies, funny enough. Okay, so what do we have that we understand that we see now? Well, we have this bear gap filled up here, and then this bull gap filled down here, and then we just got a higher low with a really strong tape for the morning the following day. And where is this all pushing into? Can anybody pause the video and tell me where this day was pushing into? This is an imbalanced sell over here. So what I mean by that was this was a gap up and then a sell with a sell with absolutely zero consolidation. So this was just immediate absorption of any buyer that stepped up to the plate over here. And it was a bidless territory where there was aggressive sells happening, and quite frankly, I mean, there was almost little to no effort, it seems like, in terms of buyers that were stepping in over here. So whenever you're seeing this and you go, oh my gosh, we need to push and price needs to facilitate its way higher, it's going to have to be within the confines of this candle, right? Because what we did was we only got a very shallow retracement for a lower high, with like a resistance being built for 2 days beneath all of this, right? And when you put this into perspective, guys, it's nothing, right? It's looking for a lower high. It can't get the lower high. It consolidated into the close. It gapped down into the golden pocket. It found a higher low off of 173, and then from there, that's whenever we started to get the expansion higher into this imbalanced candle. Once we reached the upper confines of that spot, kind of like the little breakout failure level, is whenever we started to fail, but we never did test 180. Keep that in mind. Remember I talked about how the side that doesn't get the test of the level, it could be identified as the new draw to move your way back higher. Price will facilitate its way higher back into that spot. And then you want to look for the sequence happening into that spot. Remember how I talked about my XLE thesis with path of least resistance and like Shopify a long time ago? I talked about like Pepsi and why I was so bullish on Pepsi for a bit. Guys, it's all because we have an external with internal resistance being built off of it, and then consolidation beneath that resistance to the point where, okay, we might be tapping yesterday's high, but there's a high above yesterday's high. There's a high swallowing all of this resistance. And given the fact that we had this accumulative look yesterday, so we put in bull gap fill, higher low. We did sell back off. Where do we sell off into? Just the previous spot of accumulation, so it's somewhat healthy. It makes a lot of reasonable sense here. Little consolidation, and then we start accumulating off of it with one lower low, two lower lows, three lower lows, and then a fourth lower low, and then a nice, decent little close. This is where I took full exposure to that weekly trade that I did have. And then what do we have above us now? The external high. If you want to go to the hourly, you can. All this really does look like, guys, is from the hourly chart, bar by bar by bar by bar. What the fuck? Dude. Alright, whatever. Bar by bar by bar. Four bar series of hourly higher lows. Alrighty, now we get the expansion. Where's the expansion likely going to be? Well, let's talk a little bit about actual resistance versus consolidations that failed. This is a consolidation that failed. This is just a lower high for the time being. It is off of a previous resistance, but if you were to just zoom in, this isn't necessarily resistance. It's more or less just sell side kind of pushing their way lower, getting back to a better price where they can rebid. So do you think that there's going to be a profit taker within this zone if this was just a lower high from the larger perspective of where Tesla might be heading, considering this volume, considering this resembling the big boys loading? No. It's going to be technically a range of path of least resistance for over here. And that's exactly what it was. So yeah, this was my little execution spot. I was ideally looking beneath previous other days. A fill of this gap. Whenever you go into the hourly, we filled the gap, and then we obviously had a red to green move off the gap fill, and then we never dug into this imbalanced 15-minute candle. We just put a flat top resistance in on some sort of like higher low failure. It never worked, right? It just gapped down into the 618. That's why on Friday, I took the next week expiration contracts. And then from there, that's whenever we get the expansion, but we never tapped 180. So what am I doing? Well, if sell side structure can't do something that looks like this, where we break and we retest and then move our way down into a lower gap, or if we can't break or push higher, find a lower high, fail on some volume, break beneath, retest, and move. If we can't do anything that looks like this, I'm looking for Tesla to at least draw itself back towards like this previous support failure into this resistance now, and likely just into the 180 area. So we did tap Friday's high today, Tuesday. Keep in mind Monday was accumulated. Keep in mind, if you look at this from like a volume standpoint, none of this looks super distributive. This was the only spot that worried me a bit. But given the fact that we based down here, never filled the bull gap the following day, and then found a red to green move, and then consolidated into the close with two lower highs from this imbalanced candle being relatively shallow, then, like I said, looking for another higher low, a notably strong tape. We start getting the notably strong tape. We get the retest, and then the following day we open, we fail, and then we accumulate with a 4 lower low range here, just simply back into this little consolidation on the hourly, right? So that's that. That's kind of the Tesla breakdown. Whenever you go into the daily, all this really is obviously like I said, lower high, lower high, lower high, and then obviously break of lower highs, potential structure shift now. Heavy volume is really all that matters, followed by really low selling volume back into the fill of the gap. And then the 180 external resistance, where we likely going to push to this bear gap from over here. Given the fact, guys, that this was such a crucial level from like the earnings candle low that turned into some sort of resistance, and then they never got the follow through on this once again after they lost it, just goes to show that this needs to see the expansion and follow along with the party that has shown their hand way more within the name, right? These are two gap ups on heavy volume. It's very notable. So I'll be looking to roll profits on this one, but that's just a quick little example of waiting for, being patient for your edge, and this was where we were really showing off a clean edge. Now we go over to Oracle. Oracle is just really nice, dude. Alrighty, so this is somewhat similar. This is a major bull gap, really heavy volume, earnings peg, followed by a drop and a fill of it, and then you start getting your pop, your higher low, your pop, external resistance, massive level to get above, and then we start looking like a 5-day consolidation period on really dried up volume towards like what would be like kind of like a discounted range, and then also like this little gap fill primarily over here. You could take a look at like where the heavier volume draw is. Like I said, it's and where the higher low would likely be off of. It would be off of like what happened to be something that ties in with like this gap down closing print, this opening range low being created that we lost, and then the resistance in between. This would be where I would start accumulating calls for a higher low off of discount as well, with the wider perspective of what the trend is. By the way, guys, this was how many days out? This was like over 10 days out. So I was accumulating for, I want to say, a day or two. Really no drawdown other than all the way down here, and then kind of like break even over here, and then pop news, and then the news comes out, and like I said, a very critical spot. That's that. Those are the two trades that are very similar in terms of wider perspective of the heavier intention, heavy volume gap up, followed by controlled sell side move. Likely who marked up price here is unloading inventory and then repurchasing that inventory down here. And like I said, given the fact that these charts are just unbelievably clean with showing what side is winning at the spot where they previously progressed from. It's just very clear, very easy, very stress-free. These are my two of my biggest trades on the year so far. Tesla ran 400 and something percent. This one ran like 300%. We can go over and look at Johnson & Johnson. Very beautiful trade. Like I said, heavy volume gap up. Healthcare names were catching the bid. And then we fill this previous higher low that we lost. But what do we have above us? Sell-side balanced candles in a breakdown level that wasn't ever really retested. This was just a bleed right through and a capitulation right beneath it of a previous support that had a lot of money built off of it if you look at this from like zone to zone perspectives. Kind of just gapped up into it, kind of retested it technically up here, and then never really got the retest over here. It kind of just bled beneath and had a further deviation away from it that never got a true constructive retest. So where am I looking for this to move to? 155. Where am I executing? Down here off of a triple inside bar, leading into the expansion. New week, new tape. I talk about it. This is a very compressed chart with 150 being the level that we need to reclaim. I was adding over here and over here and just on all of these lows for like 2-3 days. And I had this week's expiration. I had May 17th J&J calls. So I was dealing with a little bit of theta decay from like Tuesday into like Wednesday into like Thursday. And then finally, once we started to see that expansion, I held this thing, and there was really it was just higher lows after, right? So flat top resistance, higher low, 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 into target, right? Into target. So, yeah, the only time I was a little scared was this morning. And I figured, it's resistance. We're probably going to push into it, retest the previous day high. And actually, what happened and what really gave off a really clear signal over here was Friday was a really nice strong close into a gap up, followed by like a sell-off and then a base into like the previous consolidation / high day of the previous day, which was Monday. Or this was actually Monday's close over here. So, yeah. And then, like I said, just really strong trend, constructive trend ever since. And then funny enough, when we hit target, we gap down. But that was a perfect timing with execution and patience there and trusting my system. And that was like a 400 and something percent trade. So that was a really nice one. I can't really think of anything else that I've taken. I mean, I've already explained the thesis on Moderna, or not Moderna, what am I saying? I've already explained my thesis on MMM for a very long time, so fuck that. We've already talked about it, but yeah, that's a recap on the Tesla trade for today. My only trade this week, but it's a 400% trade. Basically held like half the size on that trade to like 400%, so I'm cool with it. So I mean, that's gonna help me survive for now until we find something really clean. And then we also missed the meta. We'll go over the meta chart that I really wanted to shorten. One that I lost on a profit roll Wednesday of last week. So whenever we go to the 5 and we take a look. All right, first of all, this looks like a short. And I noticed this starting to give off the vibe over here whenever it swept these relatively equal lows, and then it had a really nice day. But then that really nice day was also just pushing our way back into like a bear gap that was never filled or even tested. So then once we pushed back through that, we started to get a sell on the fill of that morning, and Meta was actually relatively weak for that day, for the time, given the fact that QQQ was breaking out and trending all day on Wednesday. This was QQQ's Wednesday trend over here. Okay, right. So this was QQQ trending at like 1035, looking like a green to red type of day. Well, it was technically never red. It was green, gap up, and then profit takers, and then a buyer off of the bull gap that we made overnight. But let's just go back to Meta. So this didn't start trending until about like 1 or like noon. So I shorted it here and I shorted it here, and then I tried to short it here. Shorting it here was a bad idea. I profited, and then I profited on this 50% here, like 30% here, and we got a higher low. What that higher low was off of was just simply put, just holding this previous established bear gap as newly found progressive spot for now a bull, and then the expansion off of it, and likely where this was marking up its way into was just wider perspective of like this whole daily range up here of support that has a lot of money built off of it, like 481.78, kind of that spot. And then from there we get the gap down, we get the consolidation, we get the week close, another gap down, consolidation. Where's this consolidation off of? Retest of the same spot that buyers were battling off of, retest of the Thursday low, and then it just kept on selling and selling and selling. Probably should have just bought some time here with a short, and this whole position over here would be pretty green over here. So that was the meta opportunity that I missed out on in terms of just being a little bit too aggressive with my expiration. That's that, boys.